Prime Minister Anthony Albanese says he has no plans to change the negative gearing tax breaks for property investors, but there are some Labor backbenchers who want him to keep an open mind. Yesterday, Mr Albanese and the Treasurer Jim Chalmers both confirmed the Treasury were modelling potential changes to negative gearing and the capital gains tax discount. Here's Mr Albanese speaking to Peter Stefanovic on Sky News earlier this morning.
Well, we have no plans to touch or change negative gearing. What we're concerned about is supply of housing, and I'm not convinced it'll make any difference that's positive when it comes to supply.
Former Labor leader Bill Shorten campaigned at the 2016 and 2019 elections to reform negative gearing, losing both elections to the coalition. Opposition leader Peter Dutton has seized on the mixed messages being communicated by Labor over the past 24 hours around negative gearing.
In the last 24 hours, it's been phenomenal on what they're doing on negative gearing. The Treasurer dumps this story out there and then he jumps on a plane to go to China. So he's nowhere to answer questions. And the Prime Minister keeps changing his story about whether the government is adopting the Greens policy to abolish negative gearing or to cap it. What are they doing in relation to capital gains discount? What does that mean for uncertainty in the economy? And the Prime Minister can't answer a question with honesty.
Well, let's bring in here Ben Kingsley, the chair of the Property Investors Council of Australia. Ben, thanks for your time. The Prime Minister seems to have cooled a bit on making changes to negative gearing, saying he's a bit worried the policy would restrict housing supply. I mean, what impact would removing those negative gearing tax breaks potentially have on the supply of housing in Australia?
I think it's pretty confident that there'll be a lack of supply that will be coming into the market. What we've got to understand is, supply is critical, not just for obviously those most in need of rental accommodation where there's no choice for them, but there's a lot of people who use rental accommodation, private rental accommodation, to try a new city or relocate for a new job or to even have their kids in a better school zone. So having an adequate supply of rental accommodation is essential for economic activity and economic growth. So it would be crazy to introduce anything that disincentivises adding to supply.
Yeah, there's obviously big problems with rental, of access to rents at the moment. There's also a big problem with housing affordability in Australia. I mean, how do we address this? Are there potentially better policies out there that can be implemented to make homes more affordable again?
I think what we've got to understand is when we even look around the globe, there are other sort of areas and countries that don't have negative gearing but have really high prices. And that's got to do with the overall economic activity that happens in a particular location. And anytime you have those advanced Western societies, you have really high land cost, really high property prices, because property is one way in which we express ourselves. But coming back to your question, I mean, what other things can we do? Well, it definitely does come down to looking at the way in which we produce properties and can we, innovate in terms of the cost to actually build new construction, but also in terms of the level of restrictions and red tape we have around the marketplace as well. So there's no doubt that, that the time it takes to apply for an approval and then obviously get that approval through and then ultimately build that property in some states and territories, moves out into a couple of years to be able to build that type of accommodation. So there's definitely a bit we can do in terms of the regulation and the, planning guidelines. And I think there's a lot we can do in regards to looking at ways in which we can help. So I really like the government's equity share scheme to allow those people on lower incomes to be able to also co-invest with the government to get into their own homes. So we really support those types of initiatives, but we also need to make sure that when an investor is investing in property, remember they're running a small private rental accommodation business. And if they're not getting an adequate return for the risk that they're taking, they'll simply take their money out of the market, and that will ultimately result in lower rental supply, which will mean higher rents and still pressure in terms of undersupply in the housing market.
Yeah, Ben, from a property investor's perspective, I mean, how important is it to have policies like negative gearing and capital gains tax discounts in place?
Yeah, well, that is an excellent question, because at the end of the day, the economics have to work. We've seen the big business sort of being tried to be wooed by government with 40-year tax incentives to actually build that, because the economics don't stack up on their own. So they need to make sure that there is an attraction and a reward at the end of the day. So let's use an example of 13 interest rate rises. Most small businesses that are running these private rental accommodations have had an incredible increase in terms of the cost of holding those properties. Now, they've passed some of that on in terms of higher rents, but really, in terms of the research we've seen, only about 25% of that for those people who still have a lot of debt associated with their small business. Now, one of the things that we really want to make sure that we focus on is, if we can't get this short-term, because it's a short-term incentive that we're talking about here, because over the long period of time, the debt's retired and the property starts to return positive cash flow, which we obviously pay tax on. So if you're thinking about adding another 30% of cost to the actual investor, they're going to say, there's no incentive, there's no reward, I'm not going to get any passive income from the property. Maybe the capital growth over the short term or medium term will slow down a little bit. So I'm potentially going to look at shares, and ultimately that puts the economy in a worse position. It obviously, Jim Chalmers talks about economic and people mobility as being a critical thing to continue to drive our cities and our capital cities moving forward. So it really is quite concerning to me that this would even be entertained. And I think our Prime Minister, Mr Albanese, has clearly understands that, but there's obviously a political motivation here with regards to the Greens' populist policies that's causing them to sort of talk about making changes in these areas.
Yeah, there's clearly a lot of politics at play, but how's investor buying activity tracking at the moment? Are property investors starting to feel a bit more confident again in recent times?
Yeah, that's a really fascinating and another excellent question. What we have seen in the ATO data is, in terms of the number of new investors that are coming to market in the last 5 years, is actually slowing down. So we've seen a lot of macro-prudential interference in the market from APRA, and we've seen a lot of rental reforms going around different states and territories. And that has certainly scared off a lot of mum and dad investors to think about investing in residential property, where it's just getting too hard. They feel like they're losing control of the property that they own, and the business that they're trying to run. And so, just by way of example, in the previous 2 decades, before these recent changes. So
Ben, I'm sorry, we've run out of time.
I'm sorry, Ben.
Thanks for coming on the show. Sorry about that.